Fed members have been very consistent in their message that decisions at future Fed meetings, whether to hike their short-term benchmark rate, whether to hold steady, or cut the federal funds rate, will be dependent upon incoming economic data confirming not only that inflation is coming down, but also a slowdown across economic sectors. And this week provided a ton of market moving potential. We had CPI, Consumer Price Index, the market's favorite inflation metric. We had PPI, we had retail sales, a gauge of consumer spending and demand. We had jobless claims. We had New York Fed manufacturing. We just had a ton of economic reports touching on the sectors that the Fed is paying most attention to. Now, unfortunately, they pretty much all showed a very strong, robust economy. I mean, even inflation ticked up on its month-on-month core number. This is not at all what the Fed wants to see. Now, while rates did unfortunately worsen minimally over the course of the week, I thought they were going to get crushed, and they didn't. We hit several technical ceilings over the course of the week, almost like the markets were saying, we're going to hold off. We think rates have risen enough, and we're going to wait and see what the Fed is going to say at this next meeting here, Tuesday and Wednesday of this week. Now, universally, projections have the Fed pausing at this meeting, right? No hike at this meeting. It's like a 97% probability. But what is Powell going to say during his 2:30 press conference? Will he say that another hike might be appropriate before the end of the year? Is he going to say they're going to take kind of a wait and see approach, as most of the hikes up to this point have not fully impacted the economy yet? But what's most important is going to be the release of the dot plot. This is a graph that breaks down the individual Fed members' projections for the federal funds rate over the next several years. It kind of serves as a good gauge of how the Fed is viewing economic conditions years down the road. And it is certainly viewed by the markets as a good projection for their own forecast. So this directly impacts mortgage rates. You have any questions at all about these headlines, about these changing projections, or what we should expect from mortgage rates moving forward? Definitely give me a call. We'd love to talk to you. All right. Have a great week.